Welcome back, guys. In today's video, I'm going to be talking about PSA, public storage, and why I think it's a strong buy. So let's get into it. First off, for everyone that doesn't know what PSA is, it's a specialized REIT, or it's part of the real estate sector. Now, Public Storage was founded in 1972 and is America's largest self-storage REIT, owning over 2,400 storage rental properties in 38 states and in European countries as well. The company also owns 42% stake in PS Business Parks, or PSB if you want to look that ticker symbol up, which leases out commercial space to small and mid-sized businesses. Self-storage is a very competitive industry that has low barriers to entry and is hard to differentiate in. The company's main advantages are its sheer size, leverage costs to achieve better profitability, focus on major metropolitan areas, better demographic and convenience, and well-recognized brands. So, let's get into the video. As you can see on the Robinhood.com page, Public Storage is up 3% for the year, but it's up 60% in 5 years. Now, 420 people do own this stock on Robinhood, and 6% of analysts are saying to buy right now. With that said, I believe this is a strong company to buy into because they have a nice low PE ratio of 27 and a dividend yield that's right around 4%. They have a nice average volume of 973,000, and they employ 5,600 employees. With a market cap of $35 billion, they have a lot of money to use and invest with. They're 2% lower right now than the average price paid of $206.88. As you can see, market price is at $203.30 right now. You could always read some of these articles from Morningstar, but I'll basically cover this in just a minute. I like their earnings per share. It's up around $2.75 per share in earnings, which is great. It's a very profitable company to get involved with. If we go to thestreetrating.com, they're also claiming it as a B or buy. This rating has been in the buy rating. This stock has been in the buy rating since 2011. And they have a target price of $249.75. So if you get into it today at $203, you would literally make $46 when it hits its target price. Now, the street rates Public Storage a buy, and this is driven by some important positives, which we believe should have a greater impact than the weaknesses. Now, the company's strengths can be seen in multiple areas, such as its revenue growth, largely solid financial position with reasonable debt levels by most measures, good cash flow from operations, expanding profit margins, and increase in stock price during the past year. Some of the highlights for this company are they've increased their revenue slightly by 3.2% compared to last year, which has helped boost the earnings per share. They have a debt-to-equity ratio of 0.16, which is very low, which shows that they're successful in managing their debt. And their net operation cash flow has increased 11% to $600 million. Now, with that said, the gross profit margin is rather high, currently at 56%. With a net profit of 51%. They are making a lot of money on their dollar per investment. They are a good company to get involved with. And here are some of their peers and competitors. IRM, as you can see, Iron Mountain Inc. is also at the top of this list here. Those are probably two of the best REITs that are specialty REITs right now in the market. I also did a video on Iron Mountain Inc. Last week or two, so you could check that out in the Strong Buy playlist as well. Some of the contributing factors here: 4 out of 5 stars for growth, 4 out of 5 for total return, 4.5 out of 5 for efficiency, 2.5 out of 5 for price volatility, 5 out of 5 for solvency, and 4.5 out of 5 stars for income. Now, with that said, I'm going to show you a quick snapshot of their dividends that they're paying out. and their past history of dividends on the Nasdaq.com, they are actually increased it back in 2016 from $1.80 a quarter to $2 per quarter. You're now making $8 per year on a company that is at $203 in share price currently. Now, with that said, they're just paid a $2 dividend. Effective date was 12/11. Payment date will be on the 27th, just a couple days after Christmas. Now, one last thing before we go here, I want to talk a little bit about Public Storage and why it's a strong buy. As long as people continue to experience major life events such as unexpected moves or divorce, job changes, etc., there will be a demand for self-storage warehouses, even during economic downturns. In fact, the self-storage industry's free cash flow per share fell by less than 5% during the financial crisis, according to a 2013 report by Bank of America and Merrill Lynch. While the firm's quarterly dividend has remained frozen since late 2016, Public Storage has still paid uninterrupted dividends since 1981. The business generates excellent cash flow, enjoying an A credit rating, and maintains a reasonable AFFO payout ratio near 80%. Even if the industry supplies remain a headwind the next few years, there has been a boom in new construction of storage facilities. The company's payout should remain on solid ground and has good potential to continue growth over a moderate pace over the long term. This is why I believe PSA is a strong buy. If you enjoyed this video and you like my strong buy series, show my channel some love, subscribe to my channel, and smash that like button so I know that you liked my videos. Don't forget to click the little bell as well so you don't miss any of my upcoming videos either. Alright guys, happy trading, happy holidays, and have a great day.